What's going on with Tesla? It used to be in every headline, but lately, the buzz has faded. Why isn't anyone talking about Tesla anymore? What if Tesla's disappearance from the headlines isn't because it's irrelevant, but because we're between chapters in its story? Welcome to the Investment Diary. This isn't hype. This isn't just theory. This is my investment diary with a long-term view grounded in reality. In this video, I'm giving you the exact, no-fluff analysis of the current stock market. To start, we are going to peel back the layers on why no one seems to be talking about Tesla anymore and why that could be the calm before the next storm. We'll explore sales trends, competition, politics, new product pivots, investor divides, execution risk, key catalysts, and more, with enough depth to fill a full 20-minute deep dive. 1. From wall-to-wall hype to radio silence. Tesla's rise was a cultural phenomenon. In 2013, when Elon Musk unveiled the Model S, headlines called him the next Steve Jobs. Investor presentations drew standing-room-only crowds. By late 2021, Tesla was the world's most valuable automaker with a market cap eclipsing Toyota. Yet by mid-2024, Tesla was down nearly 40% from its all-time highs. What happened? Sales momentum stalled after pandemic-era pent-up demand gave way to broader EV competition. Supply chain constraints and price cuts chipped away at margins. Autopilot controversies and political backlash shifted the narrative from innovation hero to liability risk. This shift from gotta get in at any price to why bother right now left Tesla off the top stories list. But quiet doesn't mean dead. It means the story has entered a new, more complex act. 2. The sales slump and rising competition. Tesla's core business is still cars, so let's break down the numbers, region by region. China. Once Tesla's fastest-growing market, Model Y deliveries in Shanghai dropped 9% year-over-year in Q1. That's a sharp reversal after several quarters of triple-digit growth. Local brands like BYD now match Tesla's range and undercut its prices by $10,000 or more. Meanwhile, NIO and XPeng are rolling out new mid-range SUVs with similar features. Europe. Germany, one of Tesla's strongest markets, saw Model Y sales slump by nearly 50% year-over-year in April. Volkswagen's ID.4 and Renault's Megane E-Tech are priced more affordably and boast fully local production, avoiding import tariffs. US. The home base isn't immune. Model 3 and Y volumes have flattened after one-time incentives expired. Ford's Mustang Mach-E and GM's Equinox EV are grabbing share in suburban driveways. Overall, Tesla's share has slid from 78% in the US EV segment to closer to 60%, and from 44% in Europe to low 30s. That's the steepest share erosion in Tesla history. Why this matters? Tesla built its moat on first-mover advantage and premium branding. Now that moat is being chipped away by fast followers who learn from Tesla's mistakes and optimize for local markets. 3. Politics, protests, and the Musk effect. Tesla isn't just a car company, it's an extension of Elon Musk's personal brand. That's been a double-edged sword. Political alignments. Musk's public support for high-profile politicians and controversial statements have sparked protests outside Tesla stores in major cities. Some employees report harassment at supercharger stations. Legal and regulatory scrutiny. EU regulators open probes into phantom braking complaints. Australia's Safety Commission flagged autopilot crash risks. Each new inquiry garners brief headlines and investor jitters. Boycott campaigns. Groups on social media encourage people to damage Tesla vehicles in solidarity with political causes. Street artists painted over charging stalls with protest slogans. This politicization shifts the conversation from cool EV startup to flashpoint for culture wars, which isn't great for consumer sentiment or mainstream media coverage. 4. The Robotaxi dream and AI pivot. Tesla's long-term vision has always been beyond cars. The Robotaxi, a fully autonomous ride-sharing fleet, promises massive recurring revenue, but the dream has faced delays. Regulatory hurdles. Texas's new AV testing rules forced Tesla to pause beta Robotaxi trials in Austin. Technical gaps. Tesla's FSD, full self-driving beta, still requires driver attention, and reports of erratic behavior surface weekly. Dojo supercomputer. Announced as the backbone for autonomous training, Dojo is yet to fulfill its promise, with delays in chip yields and software integration. Meanwhile, competitors like Waymo and Cruise are rolling out limited commercial robotaxi services in Phoenix and San Francisco. Even companies like Pony.ai and Motional are inching ahead in geofence zones. The pivot to AI and robotics, including the Optimus humanoid project, signals Musk's intent to diversify Tesla beyond automotive, but until Dojo and Robotaxi deliver revenue, they remain future optionality, not present-day drivers. 5. Investor divides. Bulls versus bears. Tesla's investor base is deeply split. The bulls cite Tesla's unique position in EV, energy storage, insurance, charging network, and software. Names like ARK Invest and Wedbush's Dan Ives believe any sales lull is temporary, and that Robotaxi and insurance will unlock the next leg up. Price targets remain in the $550 to $650 range. The bears, including Ross Gerber and some large family offices, worry about maturity in major markets, loss of pricing power, Musk's political distractions, and valuation risk. They've trimmed positions when TSLA trades above 20 times sales or PE above 60 times. The result? Tesla trades at multiples far below its own highs, yet still above most auto peers. It's a battleground stock for anyone who believes in technology-driven growth versus sector rotation into value names. 6. Execution headwinds and product pivots. Tesla's operations juggle multiple moving parts. Gigafactories. Berlin and Texas are ramping production but have faced community opposition over water use and environmental permits. Pricing strategy. Tesla has cut prices by up to 20% in some markets to drive volume, pressuring margins that once hovered above 25%. Model refreshes. The Model Y Juniper refresh boasts new design and range improvements, but initial units had software bugs and panel fit issues that delayed deliveries. Mass market car. The rumored 25T Tesla Model Q or Model 2 has been pushed into late 2025 or 2026, dashing hopes for an earlier, lower-priced entry. Every one of these execution hurdles translates into noise, and when Tesla is covered, it's often for each new misstep rather than the quiet progress that follows fixes. 7. When will Tesla be hot again? Tesla will reclaim headlines when one or more of the following occurs. 1. Sales rebound. Clear evidence that price cuts and expansions reverse declines. 2. Mass market EV launch. A 25K car hitting volume production with acceptable margins. 3. Robotaxi debut. A truly driverless service generating fair revenue. 4. Musk stabilizes brand, stepping back from personal controversies or delegating public interactions to others. Until one of these catalysts lands, Tesla will remain a steady but muted story. 8. Is now a good time to buy? Let's weigh the bull and bear cases. Bull case. Deep pullback from peak offers attractive entry for long-term believers. Unique software stack and network effect in charging and FSD. Optionality in Robotaxi, insurance, Dojo supercomputer. Bear case. Competition eroding market share in key regions. Valuation still elevated versus traditional automakers. Execution risks on product rollouts and regulatory approvals. Your risk profile matters. Traders may fade rallies around $350 to $400, while long-term investors could accumulate below $250 to $300 and hold through the next multi-year leg. 9. Key data points and what to watch next. Q2 2025 deliveries, consensus 380,000 to 400,000. Anything significantly above or below will trigger 5 to 10% swings. FSD beta expansion, any major accident or regulatory clampdown in California or Europe. Factory outputs, ramp rates from Giga Berlin and Texas, daily production trends. Price changes, further cuts or re-increases if order books fill up. Autonomy license approvals, any state or country granting driverless rights without a human at the wheel. Mark these on your calendar and set alerts. These are the data points that will break the silence. 10. Conclusion. The quiet is the opportunity. Tesla's absence from the headlines isn't a sign of irrelevance. It's the market catching its breath. Sales growth is normalizing, competition is heating up, and Musk's personality is polarizing. But underneath, Tesla still leads in EV software, charging infrastructure, and brand loyalty. If you believe in Tesla's mission to accelerate the world's transition to sustainable energy, then this period of quiet could be your most attractive window to build a position. Just be prepared for continued volatility, heavy debate, and the occasional headline that reminds the world why Tesla matters. 11. Call to action. Now it's your turn. Are you adding to Tesla on this pullback, or are you waiting for clear evidence that EV sales and FSD are back on track? Drop your thoughts in the comments. I love reading every perspective. If this deep dive helped, hit like and subscribe to the Investment Diary for more no BS market analysis. Thanks for watching. I'll see you in the next diary entry.